Joining us in our studio here at the Johannesburg Stock Exchange is David Brown. He's the Chief Executive of Coal of Africa, previously the CEO of Impala Platinum, and I'm sure he's glad in a way that he's not involved in that sector anymore. But I guess things have not been that easy for you, David, in the coal business. Coal of Africa is a much smaller business. I guess you've been getting out of bed earlier in the morning to try and get this one fixed.
Thanks. Good afternoon, Alex. Certainly we embarked on a turnaround strategy probably some 12 to 15 months ago. One of the things that attracted me to Coal of Africa was the very substantial and significant resources that it has access to. It's got very good high quality hard coking coal resources, which do trade at a premium to your normal thermal coal, and certainly add that to the substantial resources certainly attracted me as being a company that was worthwhile getting stuck into and helping sort out.
It's got potential.
It's got great potential,
but it's hard work to get the potential unlocked.
Yeah, I think the problem with it at the moment is the macro environment, certainly from commodity prices and coal in general, is that obviously prices have come off again during this calendar year, another 20% down. The SA mining scene is obviously some policy issues and difficulties which investors are shying away, and that's the message that I get certainly from London and America. And then you couple that with the fact that the junior space tends to be more future dated in terms of access to cash flows. People are tending to, if they're going to get into commodities, want to get into near cash generators rather than the longer dated resources.
Now, this is a stock that was around R8.50 2.5 years ago. It's trading at 60 cents now, up nicely since you did the announcement on Mooiplaats, but It's a long way. I mean, that's a negative 10 bagger already. I guess people are being attracted by the potential in the same way as you are, but sometimes it takes longer to unlock than anticipated.
Yeah, look, I think we've got great support from our large institutional shareholders. As you know, we announced an equity raise. The EGM shareholders voted in favour of the 88% shareholders who voted at the EGM. 99% were in favour. So quite clearly, there's a good understanding of what we need to do. The fact that we need to raise this money in order to get to the next phase. I think you are right, given the commodity environment, given the SA mining scene, it is probably going to take longer to unlock than maybe 2 or 3 years ago.
And the sale of Mooiplaats, how firm is that?
Yeah, look, I think that's an asset that has proved quite difficult to sell. We put that on the block, so to speak, some months ago. We had a lot of interested buyers. I think the real issue is access to funding. Given the decline in commodity prices, if you're a seller, it's probably a good time to be a buyer of assets at this point in time, given the valuations. And trying to sell an asset that had been making losses for the group is quite difficult. The buyer is someone who has a contiguous piece of ground and therefore will be able to unlock substantial synergies and therefore makes economic sense for this person as the purchaser.
So you looked all around the market and ended up selling to your neighbour?
Kind of, yes.
That doesn't tell us that the price were you very much a price taker? 250 million sounds like a lot of money, but in this case?
Yeah, look, I think we would have probably preferred more, but given the commodity price environment and the fact that there was really no natural buyers of the asset other than this individual who had a contiguous piece of ground, it wasn't as if we had a lot of choice. So we were price takers in that regard, yes.
All right, now people are looking at this share price. They're saying it's down by more than 10-fold in the last 2.5 years. David Brown left a big job at Impala to come and run it. It's bargain basement levels. You've had institutions who've been prepared to put money behind it. What's the story that the small shareholder is missing because he isn't coming in here and mopping up the stock?
Well, I think the real issue is access to near-term cash flow, and that's really, I think, the difficulty a lot of new investors have. As I said, the commodity stocks are somewhat out of favour at this point in time, and if you're going to get into commodity stocks, you tend to flee for, shall we say, the big market caps, which are still paying dividends, and there is cash flow coming from those stocks. Whereas ourselves, as an investment thesis, effectively, we are a longer-term play. We've obviously got to work to develop those resources, and cash flow will only be in probably 2 to 3 years' time.
But you have got rid of the cash drainer.
Yeah, the cash drainers. I mean, effectively on the cash burn basis, we've reduced our cash losses from about 68 million rand previous financial year to down 21 million. And in fact, going forward for the next financial year, we'll probably be down to about $10 or $11 million. So we've done all the cost cutting that we need to do. We've put all the elements in place. We've now just got to be moving forward in terms of the development of the projects.
Any regrets?
In terms of?
Personally?
No, I don't think so. I think from my point of view...
I suppose platinum was a pretty tough place to start.
Yeah, and if you remember, my last 6 months was fairly torrid at Impala Platinum. We had the strike with AMCU at that stage in early 2012, and then obviously Zimbabwe, the difficulties in terms of being able to operate up there. So from my point of view, I'd been with Impala 14 years. I was looking for a fresh challenge. I'm not going to go and ask for my job back again. I've moved on, and certainly I'm really enjoying the challenge at Coal of Africa. It's a great team, it's a young team, and I want to see them develop over time and be able to deliver value to shareholders in the next couple of years.
You referred right in the early part of this conversation to the difficulties of operating in South Africa, that you hear from London and New York that there's not that much appetite to come and invest here. Unpack that for us.
Look, I think it's with regard to the investment dollar. I mean, effectively, during the early 2000s, when we had a locked-in commodity boom, it was quite easy to sell South Africa and sell the commodity space to international investors, particularly in the US and in the UK. And that's obviously become a lot more tricky over the last couple of years. And I think in part, starting with the rumblings of nationalisation, I think then with the recent changes in the legislation and the regulatory environment, each time there's a change that creates additional uncertainty. And with that uncertainty, given the fact that mining is a long lead game, requires significant amount of capital, investors are looking for certainty over a prolonged period of time. And quite clearly, when you keep changing the rules, people tend to get a little uneasy. And I think when you couple that with the fact that we are particularly looking further east for our money now, there has been, thank goodness, a renewed appetite, particularly coming from China.
How clean is the mining legislation in South Africa? How clean is the Minerals Department?
Clean as in?
Non-corrupt.
Look, as I say, I haven't personally had issues with it per se. I think some of the issues that we have had is around capacity. In terms of being able to deliver within reasonable timeframes. I think there's definitely a need to ensure that the red tape or the bureaucracy improves and that we are able to get license applications approved a lot quicker.
There's more incompetence than people holding out for cash.
Well, I don't know about incompetence or competence. I think it's a capacity issue, whether they've got sufficient resources available to them to actually deliver.
David Brown is the Chief Executive of Coal of Africa.